Welcome back to a series of videos on a brand new, very exciting software release called fxRulesEngine. This software has been designed to automate your trading rules as a Forex trader. We started with the previous video looking at how you would do that around a support zone or a resistance zone, in our particular case a resistance zone. And if we look at the screen now, you have the US Canadian dollars. We're looking at the 4-hour chart, and we're looking at a potential breakout through this resistance zone. This is an indicator, a free indicator on the net, which if you go to our site fxRulesEngine.com, sign up for a mailing list which will keep you up to date with new enhancements for fxRulesEngine. We'll also send you a series of useful links, including a link to this free indicator. It's not to do with us, it's provided by someone else. But you'll notice that the red areas are the resistance, the blue areas are support. So we're looking at a potential trade through this resistance zone. It'll either break out going upward or bounce and come back downward. Last time we created two rules just to simply open a buy order here and open a sell order here. In this video I want to extend that trading plan to move the stop loss at a critical point to either secure profits or at least to minimize risks, potential losses. So we do that by again working with rules and instructions, and I'll bring that up for us to have a look at. This is the modified trading plan from last time. I've extended it. We still are dealing with a potential breakout or a potential reversal. This time we have 4 rules, each with an instruction. And they've slightly renumbered, but rule number 1 we looked at last time, which was the breakout and therefore buy. Rule number 3 was the reversal, which was the sell. Now we've added 2 extra rules. This is the rule number 2, which adjusts the stop loss to either minimize our potential loss or even in some cases, if you wanted this, to lock in, secure some initial profits. Rule 4 is the equivalent going downwards, so again it's modifying stop loss. So look at the previous video if you want to know more about the opening of the orders. This time we'll just concentrate on the modifying of them. The command we use this case is modify order, and that is executed when this price level is crossed, which is the one over here. It needs to refer to the correct order, so we have an ID for that, and we use the rule number 01 and the instruction number 01. So that refers to this particular order. We adjust the stop loss, remember it was in pips, to 40, and we adjust the take profit in this case to 80. It's your decision as to what you would do in practice. Essentially that is giving us in a profitable situation, because I think we've moved roughly about 50 pips. The equivalent downwards is a command to modify order, but this time we're referring to rule 03 and instruction 01. So rule 03, instruction 01 takes us to this order, and we're adjusting to 30 pips, and we do a take profit of 70. Again, we moved 50 pips, so we've actually secured profit. So that is now becoming a perhaps a more comprehensive trading plan. By the way, just to reinforce one small point, if this is happening over 2 or 3 days and you intend to work on your computer once a day, you can modify these, you can adjust it. It's always under your control at the end of the day. This will just execute in your absence, whether it be night time or you're at work. So thank you very much. I wanted to get to a point where we had something quite meaningful here, and we will continue releasing videos. Next time we'll have a look at the support for moving average, for example. So again, thank you very much.